Thanks for staying with us on SABC News. Let's take a look at your market news now. Asian stocks fluctuated on Thursday as a volatile week draws to an early close in many markets, while bubbling trade tensions and another painful day for Wall Street technology shares continued to feed uncertainty. News of Kim Jong-un's visit to China fueled fresh hopes for stability on the Korean peninsula, but investors seem more occupied with fears about a possible global trade war and a sell-off in the tech sector. Tokyo stocks closed higher today, this as the yen weakened as investors shifted out of haven assets on North Korea hopes. The benchmark Nikkei share average rose by 0.6%. Hong Kong trade was also volatile today after equities fell 2.5% yesterday, but at the close of play, the Hang Seng Index was up 0.5%. China shares reversed losses from earlier in the session to end higher. Investors hunted for bargains after a recent correction in property and consumer shares. The Shanghai Composite Index rose 1.2%. Wall Street stocks traded mixed during yesterday. However, a flood of negative stories surrounding leading tech names, including Facebook, Tesla and Twitter, continued to weigh on the markets. The Dow Jones Industrial Average rose 0.1%. The broad-based S&P 500 closed flat, while the Nasdaq Composite Index declined by 0.6%. For more on the markets, we cross to the Johannesburg Stock Exchange. Nompumelelo Siziba is standing by. Good afternoon, Nompumelelo. How bad is the effect of these tech news and all the terrible things that are happening there affecting the rest of the markets?
Thanks very much, Nzinga. Yes, well, obviously, the US markets were still under pressure as a result of concerns around the tech sector and more regulation. The expectation is that there's going to be more regulation on the tech sector following the Facebook saga. And interestingly enough, I was just reading just now that Playboy has decided to get out of the platform Facebook because it's concerned about some of the people who are involved in Playboy, their information perhaps not being used accordingly or being used at all. So that's one negative for Facebook. But generally speaking, we're now seeing that markets generally are up today, even though the US didn't do so well. And I think that they're just shaking that off. It's a day before the Easter holidays, and maybe there's some bargains to be had following a not so lacquer past few sessions. So that's the situation at the moment. We see the all-share index up. And financials in particular are doing well, and that's quite interesting given the fact that the Reserve Bank cut interest rates yesterday. I would have thought that would be negative for banks, which tend to benefit from higher interest rates. And in terms of the local currency, we see that down about maybe 8 cents or so relative to yesterday against the US dollar. So it's a little bit weaker. It may well be in line with other emerging market currencies. But let's take a look at the indicators in the meantime. All right, I'm joined by Warwick Lucas. He's from Galileo Capital. Thanks for joining us, sir, as always.
My pleasure.
Good stuff. Concerns around tech firms and more regulation continue to dominate sentiment, but of course we are seeing markets generally up today. Your analysis?
Okay, so in terms of tech and the sort of new Nasdaq highs we're seeing, how has tech changed since those frothy days of the late 90s? Well, the answer to that is tech is very, very big and quite a profitable industries. And apart from those sort of changes, there's also a massive concentration. I mean, you have one big winner in Facebook and another big winner in Google space of browsing, and so on and so forth. So it's a very change from that competitive free week. Big tech is very, very big. I mean, if we look, for example, just at the market caps of Facebook, Google, Alphabet, and Apple, we're basically looking at just 3 stocks that are not far short of $2 trillion. So it's quite a big change that's coming through with tech being looked at in such a way. And it's also a bit of a cultural adjustment. Europe has always been quite large on privacy issues and so on, but it's a very, very new concern to be hitting the likes of the States. So it certainly makes for a noisy environment. But I think looking on a broader basis, the real worries are going to stay trade, trade and trade in that order.
Indeed. And just speaking to what you were talking about the dominance of these particular tech stocks, that's where the problem lies, isn't it? Because they're basically monopolies in their own fields.
Very much so. Very much so. I mean, the antitrust concerns there are potentially enormous.
Indeed. And then now let's take a look at the oil price. It's dipped slightly. That's on the back of information that the US had higher inventories. And it doesn't seem as though the market reacted that much to a Saudi Arabian official saying that going forward, OPEC and non-OPEC nations like Russia may well seek to control supply of or production of oil on a more long-term basis, so 10, 20 years rather than year on year.
Okay, so I think part of that will relate to the fact that attempts in the short term have proved rather hopeless, and that's because of the capacity of US shale to switch on and off. That's certainly one issue there, because I mean once you start nudging above $60, US shale rigs start rolling out again. But the longer term, it's really not necessarily such a big issue either, because quite frankly growth in oil will actually start declining from about 2035 as electrical vehicles become more and more important and your conventional fuels start declining. So I think from that point of view the market is saying, well, so what? It's a history's game.
Yesterday, the Reserve Bank came to the party and cut interest rates. What sort of reaction did we see on the bond market? And today, as I mentioned, the rand is somewhat weaker relative to where it was yesterday. I suppose that's to be expected, because if the Reserve Bank cuts rates, then it means that the rand would be rand negative, right? Yeah.
I mean that's generally the theory. I mean. Although I think it's also a dollar effect. We saw the long bonds, R186 for example, looking a little bit weaker today as well. That rate ticked slightly up, and I think it's a combination of the market saying, well, okay, we've had a cut, but that's pretty much as far as it goes. Positive for the economy, yes. I think there was scope to cut, and I think it was right that the Reserve Bank took it.
Now, we've just heard that this class action against Tiger Brands is going ahead. It's a big deal. They're representing something like 100 people, somewhere there. And if, say, because we don't have a quantum, if, say, they're claiming 100,000 for each person, that's quite a bit of money. Is this thing going to damage Tiger Brands, or do they make enough profit to be able to just deal with it and get on with it?
I think the latter. I mean, one might actually look at the share price today. It's actually up a rand or so. The size of the lawsuit has been flagged at around about 430 million rand, and I think viewers out there might look at this with a certain kind of moral horror and say, good heavens, I mean, they just don't care, blah blah. But the reality is that it has happened, and the market has to figure out what's going to happen from here, and the market keeps on trying to find certainty, and I think that's really what's happened here. They've got a sense of certainty. They know that there's going to be a lawsuit. They know almost certainly there is going to have to be a very large check written out, and rightly so. But what the final number will be is obviously up in the air. So this is probably the market's best guesses at how it's going to pan out. The damage to Tigers is substantial. I mean, it'll take a substantial marketing effort for Enterprise to be trusted in the market once again, and the other subsidiary brands. They are really going to have to work very hard to win public trust back.
Indeed. Indeed. All right. Well, thank you very much for your time.
Pleasure.
As always, Warwick Lucas, Chief Investment Officer at Galileo Capital. After a short break, in Zinga with more business news for you.